Welcome back to Investing Talk Podcast. Today, we are training our focus on a stock that sits right at the intersection of, well, energy security and national infrastructure, Uranium Energy Corp. Our mission is to synthesize the current stack of sources, everything from the latest financial reports to analyst ratings, even market rumors, to answer one central question for you. Is now a good time to buy Uranium Energy Corp? We're aiming for the clearest, most actionable takeaways from all the available research. And hey, if you find this analysis helpful, please take a moment to hit subscribe, like, and maybe leave a comment below. Also, if you want us to look into a specific company next time, definitely let us know in the comments.
Yeah, and what's really fascinating here, I think, is just how quickly the macro environment has sort of solidified this company's strategic position. I mean, this isn't just a speculative bet on uranium prices anymore. Not really. The intelligence we have suggests it's actually moving into position as a core national supplier. And, well, that changes the entire framework for how you value it.
Okay, let's unpack this then, starting with the fundamentals maybe. The revenue trajectory, for instance, looks incredibly sharp. Seems driven by surging global demand, nuclear expansion across North America, Europe, Asia.
Exactly.
For the 9 months ending July 31, 2025, their sales hit $14.45 million. That's a pretty significant jump from the $5.7 million in the same period the previous year. So that top-line growth is clearly benefiting from this big shift toward nuclear power.
It is, but we have to address the profitability puzzle straight away. Because while revenue is soaring, yeah, the company is still reporting losses. The net loss for that exact same 9-month period was around $15.9 million.
Okay, $15.9 million loss. That sounds like a pretty major hurdle, especially if analysts are giving it a strong buy rating.
Yeah.
What are they seeing that lets them, look past a current $16 million loss?
Well, the key insight here seems to be leverage and runway. Or rather, the lack of leverage and the amount of runway. Analysts are essentially betting that the company's massive cash position, we're talking $157.5 million in cash and equivalents, gives management the absolute necessary breathing room, enough runway to absorb these short-term losses while they aggressively build out that long-term, high-margin infrastructure they need. So the story here isn't really about current profits. It's all about anticipated, structurally defensible future profitability.
Right. And that cash position really is remarkable for a growth company, especially in the commodity space. Total liabilities only $64.9 million, and crucially, like you said, zero long-term debt. That low leverage structure seems absolutely critical here.
Absolutely. That liquidity buffer is precisely why the sources describe this as an exceptionally flexible and resilient capital structure. They are, highly insulated from sudden sector volatility. It lets them stay on plan, unlike maybe competitors who might be constrained by financing costs or debt covenants. This financial resilience directly underpins that strong buy consensus rating and feeds into the average 2025 price target of $15.40. They aren't just surviving this period, they're building with confidence, backed by that cash.
Okay, so moving beyond the cash, which is impressive, we need to discuss their competitive edge. The fundamentals look solid, improving anyway, but the real question is, does this company have a defensible moat against competition? We'll turn our attention there to their strategy. The company's clearly established as the leading U.S. pure-play uranium producer. They control multiple ISR mining hubs. But it seems their strategic move into vertical integration is what really defines their moat.
Yeah, that vertical integration piece is their unique and, importantly, policy-backed advantage. Through their subsidiary, United States Uranium Refining and Conversion Corp, URNC, they're aiming to build the largest U.S. uranium conversion facility. Now, this positions the company as a core supplier, potentially the core supplier, to utilities that are desperately seeking secure domestic fuel supply lines. This aligns directly not just with profit motives, but with explicit national security goals and that federal push for, nuclear fuel independence.
Okay, but doesn't focusing resources on building a massive conversion facility introduce a large new capital risk?
Yeah.
Especially, like we said, when the company's still reporting losses.
It does. That's a fair point. It's a big investment. But they mitigate that risk, or aim to, through their core operational innovation, the in situ recovery, or ISR, mining technique. With ISR, they essentially pump solutions into the ground to dissolve and recover the uranium. It lets them avoid the massive capital expense, the long lead times, and the intense regulatory battles you see with traditional open pit or underground mining. This provides an immediate structural cost advantage and, maybe just as importantly, strengthens their brand and relationships with regulators and utilities. It's seen as more environmentally friendly.
So policy isn't just a tailwind then, it's kind of baked right into their business plan.
Precisely. The company's growth path is tied directly to government mandates for nuclear energy. Federal policy explicitly supports domestic uranium supply and, critically, the onshoring of the entire fuel cycle, from mining to conversion. We've seen executive orders prioritizing domestic fuel sources and supporting, I think the goal is something like a fourfold increase in U.S. nuclear capacity eventually. Uranium Energy Corp is positioned, almost perfectly as the primary domestic beneficiary of these huge macro mandates.
Okay, that makes sense. That brings us to market sentiment then. We have the fundamentals, which are improving, and the strategic advantage cemented by policy. How is the market currently translating all this into the stock's price action? Looking at the technical picture, the sources say the stock confirms a robust upward trajectory. It's posting higher lows and higher highs over the last 3 months. That shows clear accumulation and, well, directional strength. People are buying.
Yeah, and we can confirm that strength using just basic technical levels. The stock is trading solidly above its 50-day moving average, which currently sits around $11.43. And it's significantly above the long-term 200-day moving average, which is much lower, down at $7.51. Just staying above those levels confirms that buyers are generally in control of the trend right now.
And what are the key trading levels we should be watching? Where's the support and resistance?
Okay, so firm technical support seems evident between, say, $11.50 and $12.20. That's the zone where buyers have consistently stepped in on dips recently. Resistance levels are noted higher up, particularly between $16 and maybe $19.75. That's the next major hurdle zone. And interestingly, the median analyst target sits right in the middle of that potential upward move at $15.25.
And the indicators seem to confirm this confidence, right? The Relative Strength Index, the RSI, is at 62.65. That indicates strong momentum, but importantly, it's not yet in that overbought territory. Suggests there might still be room to run before a significant pullback is needed.
Exactly. And we're seeing institutional confirmation too, which is crucial for sustaining a move. Form 4 filings, those are insider reports, indicate net insider buying in both September and October. That signals management's belief in the company's future, putting their own money in.
That's always good to see.
Definitely. Furthermore, recent 13F reports, those show institutional holdings indicate rising institutional inflows, particularly from leading uranium ETFs and also long-only funds that are structuring their portfolios around this secular nuclear theme. The so-called smart money is clearly positioning itself for growth here. Retail sentiment is also noted as strongly positive.
Okay, let's look ahead then. What are the upcoming catalysts that could trigger the next leg up in the stock price? We're focusing specifically on the next 3 months or so, say, stretching from October 2025 into January 2026. Q4 earnings are expected sometime in December 2025. What should we look for there?
Well, obviously the headline numbers, sequential revenue acceleration ideally, but perhaps more importantly, any management guidance on critical timelines, especially updates on the production start dates for the Texas and Sweetwater hubs. Those are key growth projects.
Right, operational updates are crucial.
Yeah. And in addition to earnings, we should expect potential press releases in Q4 regarding new multi-year supply agreements with U.S. nuclear utilities. These contract wins are typically major stock drivers because they lock in long-term revenue streams and validate the business model.
Okay, contracts make sense. We also need to keep an eye on federal policy, right? We expect potentially upcoming government incentives or maybe Department of Energy announcements regarding domestic uranium before the year ends. And there's also a scheduled market event, the major uranium ETF rebalancing on December 1st. Those rebalancing dates can sometimes cause significant price movement just from the fund flows.
Definitely one to watch. And beyond those confirmed dates, expected events, there is quite a bit of market chatter. Rumors that could act as accelerants if they pan out. Rumors are pointing towards a potential Department of Energy strategic purchase contract. That would be to build up the national uranium stockpile, part of that security mandate.
A government buyer.
Yeah, exactly. There's also some market buzz suggesting potential M&A interest, maybe from overseas firms looking for a strategic foothold in response to the tightening U.S. uranium supply situation.
Interesting. Okay, now to maintain balance, we absolutely must address the risk. This isn't a one-way bet. There are definitely company-specific operational risks. Things like mining delays, cost overruns on those big expansion projects we talked about, or even unexpected regulatory changes.
For sure. And sector risks are also inherent in any commodity play, primarily the potential for uranium price swings. Now, the company is somewhat mitigated here, as we discussed, because of those strong customer contracts and its dominant U.S. positioning. But still, if the overall uranium market were to soften significantly for some reason, the shares would undoubtedly feel the pressure. That's just the nature of the beast.
And that profitability puzzle we started with remains the central financial risk, wouldn't you say? The path to sustained long-term profitability absolutely relies on the uranium market remaining robust, maybe even strengthening further. And internally, it relies on management maintaining really strict cost discipline as they ramp up these massive expansion projects, particularly that new conversion facility.
Agreed. It's a balancing act. So, bringing it all together then, the overall rating, based on synthesizing these sources, comes out as a strong bullish rating. Let's call it a 9 out of 10. The rationale seems pretty clear. You've got that structural competitive advantage as the leading domestic producer, combined with exceptional liquidity and zero long-term debt, which is huge. You have highly favorable technical momentum showing clear accumulation in the stock price. And you've got multiple near-term, potentially high-impact catalysts hitting in the next quarter or two.
Okay, so the sources seem to suggest this company could be interesting for both short-term traders, maybe looking to leverage that Q4 earnings momentum, contract news, policy updates, and also for long-term investors who really want to capture that massive secular theme of the U.S. nuclear build-out over many years.
I think that's a fair summary of the perspectives. Which brings us to our final thought, something for you to perhaps chew on. Given this aggressive federal push for domestic energy independence, how will the inevitable competition between American suppliers and maybe the high potential for a strategic M&A, how will that reshape the entire nuclear fuel supply chain over the next year or so? And, what is the practical limit of federal support for a company that effectively becomes essential infrastructure for the national grid? Where does that government backing eventually stop?
An interesting question indeed, and one that will likely dictate the long-term returns for investors in this space. That's our analysis of Uranium Energy Corp for today. We hope this exploration of the sources was helpful to you. Remember to subscribe for more from Investing Talk Podcast. Until next time.